Hi there, welcome to Kneppy Invest and welcome to another answer and question video where I get to answer your questions and reply to your comments to the best of my ability, which sometimes is lacking. I've even said that little joke about 5 or so times. Anyway, time is currently 9:59 a.m. on this gorgeous winter morning. Another weekend to enjoy. Anyway, let's get started with a non-investing question because apparently last week I did have a Dracula versus Predator image or something. And there was a nice little comment from Just Jim Cramer who mentioned, what happens if Predator gets bitten? And then Roger Dawn says, it comes up often in comic communities. The general consensus is a Predator wins because Dracula has more weaknesses that a trained, experienced hunter like the Predator can exploit. Well, funnily enough, I did go down this road about 2 or 3 months ago, and through or via ChatGPT. And this is one of the great things about ChatGPT. You can just say, hey, create this story. So I went down this path. I created all these different stories, and eventually I had 2 stories, or ChatGPT created 2 stories. And I said, combine these 2 stories about Predator killing all these vampires. But then what? What if? Just what if one of the vampires can turn to Predator? And that's it. It starts with the Predator hunting vampires, but ends with the vampires corrupting the Predator itself. It's an okay story. In fact, gives some of these characters name, like Lucian, and the main vampire, the Queen of the Coven, the only vampire left, Demetra. She's the one who turned the Predator, older than the stone themselves. She was not armed. She was not afraid. She smiled. And she didn't want to beat the Predator. She just wanted to turn the Predator. So that was her aim, and she did it. So a very short story. My only thing I didn't like, and I'm a very big show not tell sort of person. In fact, I read the first Harry Potter book not that long ago, and I just couldn't finish it because there was just too much telling, not showing. So what do I mean by show not tell? If you don't understand that, if we go back up a bit. It says, above them unseen, the Predator clicked its mandibles, it studied them, learned their movements. Now it will claim its greatest trophies. The battle was brutal. That's it. That's telling us that the battle was brutal, but there's nothing there. How do we know it's brutal? Your definition of brutal could be different than my definition of brutal. So, in fact, I actually did tell ChatGPT, show, not tell, for the battle was brutal. And the reply was absolutely, here's a show, don't tell, rewrite for the line. Replacing the battle was brutal with vivid imagery. And you can just see the difference here. So instead of the battle was brutal, fangs clashed through mist, plasma bolts hissed across shattered tombs, severed wings flapped to the ground like torn banners, and the stone walls wet black with ancient blood. Cries of rage twisted into screams as vampires burst into flame midair, one after another, until the crypt itself seemed to bleed. Probably needs to be a little bit longer, but that's what I mean by show, don't tell. And ChatGPT had a lot of that. And what I did find interesting, once I started telling ChatGPT show, don't tell, eventually the stories had that in it. There was quite a few show, don't tells in this that I wanted to change. So again, prompting and ChatGPT is very important. Anyway, so I did go down this rabbit hole a few months ago, but I do have ADD, and a lot of times when I go down these rabbit holes, eventually I just become bored and go to something else, and that's exactly what I did. In fact, that's one of the reasons I didn't go for a PhD. I realized I just don't have the focus to spend all my time on the one thing, studying the one thing for 3 or 4 years. I just can't do it, and that's probably why I can't write a story. But I think ChatGPT could help me with that. But even then, I did try to start writing a story via ChatGPT, and after a few chapters, I just became bored and wanted to do something else. Anyway, so now on to investing questions. Well, sort of investing question, sort of a comment from Sensei 6011, who's just talking about going to university and that sort of thing. But I'll just mention the last paragraph. In hindsight, should have dropped out of high school at age 16 after year 10 New South Wales system and go work, volunteer at a Sydney, Melbourne, Brisbane investing firm or hedge fund and work up the ladder while also doing one's own personal investing portfolio on the side. I read that and went, if I had my time over again, this would be something I would do. Maybe not at age 16, maybe age 18, but this would be the route I would go down if I had my time over again. Now, I'd have no regrets. about my past 30 years. No regrets at all because of people I've met, dogs I've met, that sort of thing. And if I went down this path, my life could be completely different, would be completely different. Who knows? If I went down this path, maybe I'm dead already. Who knows? But this is something I would have, in hindsight, again, that's the most important word, in hindsight. If I knew what I know now, this is what I would have done without doubt. Maybe not, the only thing I would have done differently, maybe not 16, maybe at 18. So a really good comment from Sensei who really made me thought. But I'm very fortunate that in my life, I do have a lot of interests, and I went down the meteorology path. I didn't go down the investing path. That was definitely a scenario that I could have gone down back when I was like 20 or so years old. But I have no regrets at all. Anyway, just Jim Cramer. 1 year BHP chart is a mirror image of CBA. Okay, we can actually look at this. We can actually look at this via TradingView. Okay, so what we'll do is we'll start off with CBA. I don't have any moving averages, but what I'll do is I'll turn this to a line chart. And I'll get rid of this little, there we go. So all we have is a line, bit of volume there as well, but we can get rid of the volume, there we go. And you can add something else to this chart. So compare symbol, BHP, and same percentage scale. There we go. And by the way, this is going back to the start of 2024. And even from the start of 2024, they started at almost the same price. And BHP has gone down 16%, CBA has gone up 72%, but they do look almost the mirror image. And in fact, I wonder if you can reverse one of these. So if I could reverse BHP, like mirror it, I would say it does almost look eerily similar than CBA. I'm not sure if you can do that, but if we go back to start of July last year, yeah, it does look like a mirror image. You can see the share price of CBA dropped significantly back in September, and BHP rose at that time. And there's a few times when the share price of CBA and BHP do move in unison. We actually saw that yesterday on Friday, the 4th of July. They both fell down a fair bit. And we have seen CBA in the past month or so, past week or so drop, and we've seen BHP rise. So yeah, so Jim Cramer is absolutely right. Now you might be saying, who is just Jim Cramer? There used to be someone called Just James Dean. Obviously, Just James Dean didn't like his name, and he's changed his name. But I think we have a comment in regards to that. So thank you for that, Just Jim Cramer, because I think that is true. I do think a lot of the big fund managers will rotate from CBA to BHP and likewise, or the other way around as well, just because they're the two biggest companies on the ASX. And if iron ore goes on a really strong run, will that negatively affect not only CBA, but the banking sector, because they are significantly overvalued? And I think there is an argument that BHP is probably good value. So I think that is a possibility. So don't be hesitant about buying some BHP if you think that might happen. Okay, VB Ed. It just mentions here, I personally wouldn't operate a daily share trading business. I work as an accountant, tax agent, and I observe that all my daily share trader clients don't do that good. It is better to be a share investor. I probably would agree with that. If you do trade on a daily basis, not only is it difficult, it's stressful. I've tried it for like a day, and it's just so stressful. You have to pay attention, your full attention to what's happening. So the way I trade is not on a daily basis. So I do prefer to buy companies that I want to, these are trading positions that hopefully I can own or hold for a long time. So my current longest trading positions I've held for about 2 years, maybe one or two, about 3 years. So that is the way I trade. I'm also an investor. I do like to own high quality companies for the long term, but I do find when it comes to trading, day traders, not my sort of thing. So more of the medium to long-term trading. And that does work for me. It fits my personality and I do enjoy it. So I think that's the most important thing. Find what works for you, what you do find enjoyable. And there's all these different investing strategies out there, numerous investing strategies out there. Don't listen to those experts who say there's only one way to invest. There's many ways to invest. And that's the one thing I do get, I wouldn't say upset about, but I wouldn't say angry, but I'm a little bit, it's just a touch peeved off when I do hear experts say either an investing strategy doesn't work. Like there are some people who don't believe technical analysis works. And I don't think they've done the research on it. Some people who believe, because they're Warren Buffett disciples, that's the only way you can or should invest. And I don't believe that. There's numerous ways you can invest, numerous in strategies. And again, the most important thing is to find what works for you, what fits your personality. One of the things I like about your comments is how much insight you can provide to idiots like me, ignoramuses like me, maybe. For instance, Stu Percy, who is a plumber. He's a plumber. Pretty sure he's a plumber. Just tells us some info on Reece, which I've got nothing about this car. I don't know anything about Reece except they do plumbing stuff. So Reece is an on-seller of plumbing HVAC products, HVAC. Most stores also have a bathroom showroom for retail bars. No idea because I've never gone into a store. I would say the net profit margins are quite good for the industry sector. Being a plumber myself, I do shop with them, not the cheapest supplier around, but extremely well-run company and good to deal with. Their app is also the best of the suppliers. Their push into America will determine if the company share price continues to rise over the years. I love these sort of comments. I love these. So I don't be shy or hesitant about putting this sort of comment. You could be an expert in anything. You might not be an expert in anything. Just give us your thoughts, because there's a chance your thoughts can make other people think and rethink their own thoughts. And don't be hesitant about changing your opinions, your thoughts on something. Critical thinking is very important in life. And I think critical thinking is becoming less and less abundant, if that is a way to put it. There's less and less people using critical thinking. They just see something mentioned and believe that moving forward, and only that moving forward, which does sort of peeve me off again. Ben Hutchinson, I haven't had a chance to listen yet, but pleased to see Civmec in your list. Your decision to sell out before results was inspired, how I head into the fall, but this remains fundamentally a great business to own. Just got better with their inexpensive acquisition of part of WA Henderson Defence Shipyard. I topped up my position last week. Well, there you go. Ben Hutchinson is a Civmec holder. I am trading Civmec. That is one of the trading positions I have bought into last week. And let's have a look at the chart. They did release something really good recently. One of the reasons why the share price has sort of gone up a little bit. Must have been that acquisition. So it must have been that acquisition I was impressed with. And we have seen the share price. We'll put in the moving averages. We'll get rid of BHP. And we'll go to CVL. And hopefully TradingView is working nicely. I do like this chart. I do like how it's turning around. Civmec is not overly expensive. And I definitely think this little bit of short-term negative sentiment has come to an end. And now we've gone back to some positive sentiment coming in. And what Ben Hutchinson was mentioning, I sold out of Civmec just before this big drop. That was actually pretty good timing. That doesn't always happens to me. But I did buy back in at a lower price. So I'm very excited about that. I think I sold then. I can't remember exactly when I sold. But anyway, so that's Civmec. Things are moving in the right direction for that company. In fact, in this space, there's quite a few companies that are looking really interesting at this point in time. Thank you for that. Ben Hutchinson. He also mentions IVE Group. I have not had a look at IVE Group, but he mentions, and this is great information. Maybe the reason the stock is flying is that they have no less than 4 CEOs in addition to a managing director among the 10 faces of the leader page. Kid you not. Let's have a look at IVE Group. I actually have not done this before. So this is all new. So this could be, I could be taking down the bad path here. If you go to their website, investors, where about, hopefully our people and principles, that hopefully all their leaders should be in this. So here we go. So we have a managing director. Okay, so managing director, IVE Group. I don't know the difference between managing director and CEO. That is probably something I should actually learn about. Because sometimes a company has a managing director and CEO, sometimes just a managing director, sometimes just a CEO. So I don't really know the difference between managing director and CEO. So that is something I can learn about. I'm going to actually write that down right now. I've never really, it's one of those things where I've seen that there is a little bit of a difference, but what is the exact difference? Also, a group executive, CEO. Okay, so the CEO of Creative Content Integrated Solutions, a CEO of e-commerce, CFO, CMO, CEO of Marketing Activations, CEO of CX and Data, Chief People and Sustainability Officer. So I'm assuming right now that the managing director is the CEO of the whole company, or the managing director, and the CEOs of all these little divisions are one step below him. So if you look at a structure of this company, a leadership structure, I think Matt Aitken would be the top, and then the rung below him would be all the CEOs. So that's the way I would look at IVE Group. By the way, this one has a nice chart. So what you don't want to see, sort of like, what show was that? The Office, when Michael Scott and Jim were both the lead managers or something. They had dual roles. And there was a comment from one of the characters who said, yeah, two CEOs has always worked, like two CEOs of Tesla. I don't think he meant that. Or two presidents. You know, that's worked. Yeah, even though there's never been an occasion where there's been two presidents. Anyway, so you don't want, I think, four leaders without someone at the top. I do believe you just need one person, maybe two, but even then, I think you do prefer to have one person at top, and I do think this company has that. By the way, this chart does look good. Does look good. It's a nice looking chart, but too late now? Are you too late? Probably the time to get in this was back in, say, March, when the share price was 230. But anyway, thank you for that, Ben Hutchinson. I'll show you some of the bank videos I will be doing. Here's one from Chris. How do you set up and use a 200-week moving average on TradingView? Could you possibly do a video on this? I have recorded the video on this already. Thank you, Chris. The reason I recorded that is because it was really easy to do. Really easy and quick. So I'll just show you some of the other bank videos I will be doing over the next few weeks. By the way, I've already done about 20 bank videos, but the aim is to get to at least 65. We've already done 20, so we're on my way. James Nicolo, DXN, that's it, DXN, with a $sign there. And this one, I've mentioned this company a few times in the past few weeks. They released a few really good contract wins, yes, over the past month and a bit. Modular data center contract with DP World, 4.6 million modular data center deployment, a 1.6 million indoor modular contract. This company is not that big, and I'm wondering if this, particularly if they release a really good quarter, I'm wondering if this could be a really good, wouldn't say story, but a really good possible longer-term investment. Now, the data center thematic went through a bit of a lull, we can say. We saw quite a few data center companies pull back a fair bit, but the story hasn't really changed, or the tailwinds haven't really changed all that much. So market cap of this company is only 19 million. The company has been operating cash flow positive in the past, not the last quarter, but definitely, if we have a look at the chart, we have seen a bit of a shift in sentiment recently because of these contract wins. So is the chart looking really good? Maybe not as good as, yeah, definitely. It's just definitely see, just by looking at this chart, that the data center theme ran out of puff towards the end of last year. And now some of these companies, these data center companies, are finding a little bit more traction. So compare this to what's that other company? What's it? It's not DTL. NextDC. What's the ticker to NextDC? It's NXT. Of course it is. And yeah, it's not exactly the same, but you can definitely see how the data center sector ran out of puff. And I think it's starting to find a little bit more traction now. And even the NextDC chart is starting to look a little bit more interesting. Okay, so thank you for that. So all you need to do sometimes is 3 letters, the ticker of a company. I do know some experts who don't like that because they believe you're investing in a company, not a ticker code or something like that. Anyway, Scott says ETF Robo was worth a look. I I have meant to talk about this. Trading ETFs. I have not even thought about this until the last week. And I'm now starting to think, because there's way fewer or way less. Should it be way fewer or way less? There's less, fewer IPOs on the ASX. So in fact, the number of companies on the ASX is going down. And I'd say the amount of ETFs is going up. And I did read where, I forget who it was, but there's this technical analysis person, and I totally forget who it was. Oh, that's terrible. And this person mentioned they trade mostly ETFs now. And that made me think, oh, yeah, actually, that could be a good route to go down. Trading ETFs. Haven't really thought about it until last week, or maybe it was a week before. Anyway, so Robo. So I was doing a few ETF videos. I haven't done one of those for a while. So I'm assuming Robo ETF. Was that the right one? GBLX Robo ETF. Okay. Oh, gee, it's all over the place, isn't it? And geez, it is all over the place. What I would do if you want to own it for the long term is just have a look at some of the companies within this. So Global X ETFs, I'm assuming that's the one. I'm just going to Google the whole thing to make sure I'm looking at the right one. Global X ETFs. And what I do like to look, the first thing I typically look, not really management fees on costs, assets under management. I just want to see the holdings. So for instance, the largest holding is Symbotic. And I have not heard of many of these companies. Ambarella, Celistica, Novanta, Fenix, Rockwell, Cardex. I've not heard of any of these companies. Oh, Intuitive Surgical, I have heard of that company. Fuji, AutoStore, yeah. So typically, if I want to invest, they've got NVIDIA, but it's a smaller holding. What I probably would do is just have a look at a few companies on this list. For instance, I'd have a look at Symbotic. And if I do that sort of thing, Symbotic. Don't even know who Symbotic. What I do is I'll just copy that and put it into Fiscal AI. Symbotic is on the Nasdaq. Company has a market cap of, we've got an overview section, market cap of $5 billion. So it's not a big company. Revenue growth over the last 3 years, 73.5%, 5 years, 78%. So definitely a lot of growth. Earnings per share has been going down though. So dilution maybe, or maybe they haven't really hit that inflection point just yet. So I'm assuming this company is not profitable. Gross margin 16.3%, operating margin is -4. So there's no PE ratio. I would say that if you have a look at revenue, it's fantastic revenue growth. Look at that. It's gone from $100 million to $1.8 billion in a few years. And of course, this company is going to be highly loss-making, I would assume. Or maybe not highly, but they are improving. And if we go to quarterly, there's a chance the company could be profitable. Oh, they were profitable for 1 quarter, not that long ago. So I do like having a look at the quarterly revenue and income just to see where they are. So it does look like this company is increasing. It's growing, but maybe definitely not at the point where I would consider this company high quality. But maybe, what's the ticker code again? Where was that? SYM. SYM. I would assume this has been highly volatile. Oh, look at that. Look, share price has risen significantly over a short period of time. It's gone from 16, it's tripled. It's tripled from the April lows. A lot of interest in this company. If we have a look at the weekly chart, yeah, it is highly volatile. Okay, so that's Symbotic. I have no idea what they do. Let's go to the overview in Fiscal AI. An automation technology company provides robotics and technology to improve efficiency for retailers and wholesalers in the United States. And I do think this would be a significant growth sector in the future. So Symbotic and Robo ETF. So The other thing I should say is this is a good way to learn about companies, particularly in different sectors. So just find this sort of ETF and have a look at some of these companies, and maybe a few of these companies are long-term holds. And otherwise, I more than likely would buy the company instead of the ETFs, and I would more than likely just trade the ETF. And yeah, the share price has gone bananas on this ETF. Okay, so thank you for that, Scott. Eddie JJ says, this is probably a big ask, but could you do a close Google Sheet, not sure what that means, close, where you put your holdings and date added? I used to do that, and not anymore because we have all these platforms that let you follow the holdings you have. And a good site for that is ShareSite. I used to do my portfolios on this channel. Don't do that anymore, because that was a little bit more. Yeah, I used to do it every week, and then I was thinking every month, and I haven't done that for a while. And I have been a little bit more stuck when it comes to ShareSite, because I can get a lot of the information I need via Superhero. So I used to do this. I don't think I will do this just for the purposes of this channel, just because it's a little bit extra work. So unfortunately, Eddie JJ, I won't be doing that. Okay, Scott says, and he's also wondering if he's providing too much info. It is revealing to overlay Gentrack with the New Zealand 50 or 20 for a comparative view. So we can do that again. Let's go to New Zealand. We'll get rid of the moving averages, and we'll make this a line chart, and then we'll add Gentrack. And I suppose, should we just do it? No. We'll do it, yeah, we'll do it the New Zealand one. Oh. Well. We'll just zoom in a little bit over the past year. Yeah, Gentrack has gone up way more. Well, that sort of makes sense. Is there a correlation here? I do think there is a bit of a correlation, because Gentrack did reach a high back in early December, and New Zealand Stock Exchange, the 50 did reach a high then. And there does seem to be a little bit of correlation there, which sort of makes sense that the way Gentrack moves, we'll see the New Zealand X50, whatever it's called, move in the same direction, but not quite as much, because Gentrack itself is 100%, but the indice, Gentrack could be a few percent, maybe 5% or 10%, but that means there's less leverage. Same sort of thing as leverage. You get a greater move in the individual company than the indice. And I do think there's a bit of a correlation here. If I can do a correlation, if there was some sort of correlation calculator somewhere out there, I'd love to see if there's a high correlation between these two. And I would assume there is, just based off this. Anyway, that's what Scott says. It is revealing to overlay the New Zealand X50 or 20 with Gentrack. Anyway, anyone or institution buying New Zealand will be getting an ever-increasing proportion of Gentrack, unweighted by market cap. That's another good thing, another really good thing that Scott says. Therefore, or a whole done chunk of Gentrack buying on an equal weighted basis, either or newly acquired Gentrack, especially with NZX20 larger cap buy. Hypothetically, a rising pennant continuation on the NZX could hold promise for it is possibly expensive stock on a fundamental basis, but now possibly appreciably cheaper than it was on a capitalization base. Forward PE expansion. It's actually quite difficult and interesting one to study, especially if they can grow their margins a bit. So I was trading Gentrack, and this used to be my longest trade. This was the longest trade, probably 4 years I held this, maybe even longer than that. And I just decided to take profits because it was my largest holding. So when I did my top 20 portfolio, maybe 8 months ago, this was my second biggest holding, or I think it was something like that. And I decided to, instead of just taking profits, I decided to sell out completely. Or was that a mistake? Maybe, but the share price has been going sideways since November. So I'm okay with that. So taking profits, you can see the share price went on a beautiful run from the breakout back in November 2022, share price 250. So share price quadrupled. And I bought way back in, I think it was late 2020. So I held it for almost 5 years. So that's my longest trade, probably my longest trade ever. And I'm happy taking profits with this. And I've deployed that money and the funds, and the chart doesn't look all that bad either. And also, I should also mention here, Scott mentioned or says, PS, please let me know if this is too much info. No, it's not too much info. It's great information, great insight, and could be considered too much of an opinion. No, because I recognize there is some info-based assessment here, although it's no way a recommendation. Yes, I think that's good information. And here we go. Just James Dean has changed his name to Jim Cramer. Whatever call I make, the market goes the opposite direction next day. Today's call, which is sort of a joke, maybe not an inside joke, but everyone does say that. Whenever Jim Cramer makes a call, go the opposite direction and you become a multimillionaire if he did that. I don't think people say that, but I'm just sort of moving forward with that joke. Anyway, just Jim Cramer says, today's call, Lend-Lease is bottoming. Well, that's a brave call. Brave call. Lend-Lease. This, could I say this has been a disaster on the ASX? Share price, we'll have a look at the weekly chart. And you tell me. This is the weekly chart for Lend-Lease, and we'll put in the 200-week moving average. And if we go back all the way, yeah, this is not the sort of company you own for the long term. You have not done well if you've held this company for the long term, unless you bought it at the depths of the GFC back in February 2009. You could have bought it at what's the low? About $5. And you did fairly well over the next 10 years. But the share price now is at those GFC lows. So for me, in my opinion, this is more of a trading stock. And with the share price at these historical lows, possibly this could be a trade, possibly. But it could go even lower. Just Jim Cramer is saying LLC or Lend-Lease is bottoming. Is it a brave call? I think it could be a smart call that this is a support level and long-term support level. Is it a brave call or is it a smart call? In fact, I would say this is a smart call. So what you do is you find a support, long-term support level, and you buy on that support level. And if it's broken, you just sell for a small loss. But the possible upside is pretty significant. So it's actually a pretty smart trading strategy. Okay, let's go back to... Oh, just Jim Cramer, also a question for the video bank. A really good question in regards to companies having less current assets than current liabilities. This is a thought-provoking question because I had the same question with a company called Mosaic Brands. So when I answer this question, I'm going to use the Mosaic Brands example. Just Jim Cramer is using the Baidu example, looking at current assets and current liabilities. So I looked at Mosaic Brands about 4 years ago, and I noticed the current assets were significantly lower than current liabilities. I said, wait on, that is not a good thing. How does this, or how can this company survive? And I was trying to find the answer everywhere. I don't think I used ChatGPT. Maybe I should do that. I just trying to find the answer anywhere. I was even thinking, I do know a few people who are accountants, and I was thinking, should I actually ask these people, which I haven't spoken to for like 20 years, should I ask these people the question? And then I did read somewhere where high turnover companies, well, some high turnover companies will have current liabilities greater than current assets. So I was thinking maybe Mosaic Brands is a high turnover company, but I don't know. The other thing is prior to COVID-19, I don't think they had this situation. It was around COVID-19 when they had this problem, and Mosaic Brands has gone into liquidation. I'm pretty sure they've gone into liquidation. If I remember correctly, there was an announcement the other day. They're liquidating everything. Yeah, liquidation of companies, liquidators appointed. So that could have been a sign. That could have been a really important sign. But again, I don't know. So this is definitely a video I will be recording within the next few weeks for it to be released sometime in September and October. Now, talking about your insight, I love your thoughts, because in many respects you are more knowledgeable than I am. In fact, I'd say combined, you are way more knowledgeable than I am in every single thing, because combined. So another great bit of insight from Bergwick. 70% of my clients are car dealerships. The main reason for the large decrease in car sales in established brands is due to disruption from Chinese brands entering the market. Dealerships that do not adopt Chinese brands as a secondary manufacturer will struggle to make a profit. I've heard this is one of the reasons why Eagers Automotive is doing really well, because of their association with Baidu. And a few of those automotive companies have released pretty bad updates. And yeah, so some really good insight from Bergwick. So again, if you have this sort of knowledge, this sort of illuminating knowledge, I'd love to hear it from you. And I assume most of the viewers of this channel would love to hear that sort of information as well. And then it's up to us to decipher, maybe not decipher, but whether to believe you. Because just because you say something or write something doesn't necessarily mean it is true. Should also mention that. Another banked video I am doing is Happy Now's comment. Yeah, I've made the worst decision ever on MTM, period. Thanks again for another video today. Much appreciated as always. Now, the reason I'm doing a bank video on this isn't in regards to MTM critical metals. It's about decision making. And when I do train people up when it comes to meteorology, weather forecasting, I have this saying that there can be these two types of decisions. Well, there's actually four types of decisions. There's good decisions, right decisions, wrong decisions, and bad decisions when it comes to forecast. So when it comes to forecast, I'd say there's a good forecast, a right forecast, a wrong forecast, and a bad forecast. What you don't want to do is a bad forecast. So in this case, a bad decision. It's okay to make a wrong decision, because sometimes the wrong decisions can be based on something that's tangible, something that's right. So what you want to make is good, right decisions. You can also make good, bad decisions, and that's a really bad thing to do, because that does lead to bad habits. And the reason I want to do this is because don't be afraid of making mistakes or bad or wrong decisions. You don't want to make bad decisions. And I make wrong decisions all the time. So I could make so I'm aiming for 60% success rates. So that means 40% of my decisions are wrong. I have to be careful here instead of saying bad. So what constitutes a bad decision? And I'll get into that when I do the banked video on this particular comment from Happy Now. So Happy Now does just says worst decision. It could be a wrong decision, and it could be this person's worst decision ever, but the most important thing is to learn from it. And even though it could be the worst decision, it may have been the right decision, but still the worst. No, good decision. Maybe not the right decision, but it could have been a good decision. No, maybe not the right decision. And I think I'm losing you now. Anyway, Sensei, thoughts on Rectifier? Oh, this was actually the two comments from Sensei in regards to Rectifier. There was another one further up. See if I can find it. I bet I can't find it. Oh, there's a lot of comments I have to get through. I mustn't have clicked on it. What I do is here it is. Yeah, here it is. Went through my portfolio with a fine-tooth comb since the start of the new year. Saw out of nowhere an ASX stock named Rectifier, and it's lost 90% of its value from time I purchased it. And then we have thoughts on Rectifier. Bought a parcel worth $28,000 a few years ago. It's worth $2,800 now. Rectifier, you have just brought up a company that I haven't thought about for a while. Rectifier, and I was a shareholder for a little bit of time. It was an exciting company. They manufacture like stuff for electric vehicle chargers or something like that. But then there was all this turmoil in regards to leadership of the company. Quite a few of the directors and managers resigned. I can't remember exactly what happened. And that was a massive turn-off. I can see the share price is 0.5 cents. If we go back 1 year, I'm trying to remember how long ago it was. Was it maybe more than 1 year ago? Board renewal update, 22nd of March 2024. Appointment of Zorn Wong as CEO. Resignation of directors, November 2023. So you'll see the share price just drop like a rock. Now, the company does not release appendix 4C. So all they do is release half-year reports. So I have not looked at this company for a while. And the company was looking really good until all these shenanigans. So the company is actually, has revenue of $10 million and is actually profitable. This is the half-year report. So obviously, I think there's still a lot of negative sentiment in this company. If we have a look at, it's profitable, cash flow positive, is it? Let's have a look. No, it's operating cash flow negative. But if we do have a look at Rectifier, you'll be able to see this company was really interesting a few years ago. We'll have a look at the financials, revenue, and income. Yeah, a few years ago, this company had a revenue of 39 million and profit of 6.5 million, and then it has dropped off like a rock the last year. So it was looking really good at that point, and you'll notice the chart looking pretty good, the chart, and then just fell like a rock because of that management shenanigans. Yet the chart was looking really good. In fact, I had this trading channel, a bit of volatility in there. And then the share price dropped like a rock back in late 2023. Share price went from like 5 cents all the way down to below 1 cent. And has just lingered there ever since. And yeah, for me, this is a no-go just because where the share price is. And I'd say this company has a lot of shares on issue. Yeah, it's not that many. It's only 1.38 billion. Markup is only 6.91 million. And I should also mention, if you go back maybe 10 years ago, I still remember the first time I looked at this company. This would have been, 10 years ago, because I remember the share price was like 0.1 cent. Yeah, so this was 2012, 2013. Share price was 0.1, 0.2 cents. That's the first time I looked at this company, and I went, this could be interesting. And that would have been the time to buy. Share price went up like a rocket back in June 2016. Can't remember why, but it did. Okay, so that's Rectifier. Just Jim Cramer is picking a loser. He says he's pretty good at picking losers. HMC was one of his or hers. I assume because it's Jim Cramer, it's a him. HMC was one of his end of financial year bargains. Old Jim way underperformed ASX 200 in financial year 25 because old Jim sat in a huge cash pile. Anyway, HMC, I do own some shares in this company now because I do think there is a possibility this company is cheap, and I think this may be an overreaction from the market. So share price went on a really good rally in 2024. In fact, the share price went from $5 to a high of $13, and then the sentiment just collapsed. The company actually, when they did release results in February, share price actually popped up 10% on the day. I thought the results were pretty good, but then the share price just collapsed. So I do think this is possibly a bit of an overreaction from the market. So this company is an infrastructure play that they own data centers and all this other infrastructure. I'm trying to remember what exactly. I'm terrible at this. HMC Capital. They also spun out the Digico infrastructure thingy. Alternative asset manager. There you go. Alternative asset manager. If you have a look at real estate, I forgot about real estate. Homeco Daily Needs, REIT. Healthcare and wellness, REIT, which probably has affected negatively this company as well. A bit of private equity, energy transition, private credit, and digital infrastructure. The Digico infrastructure REIT. So I do think the company looks a little bit cheap at these levels, maybe not cheap. And I did put a price target of, what is that? 350. If it got to 350, I'd probably add to my position because that's the long-term sort of support for this company. Sort of the lows the company saw back in 2023. But anyway, possible opportunity for HMC Capital. Okay, a Gem knock. I bought a Drone Shield a year ago at $1.50 per share. Should I sell now or hold on? It's up to you. It's up to you. I can't tell you what to do. I can't give advice. I don't know you. I don't know your particulars. I don't know anything about you. I don't know your risk profile. Are you risk averse, risk taker? Well, if you held Drone Shield, probably you're more of a risk taker than anything else. So I can't really tell you or anyone what to do. You have to make your own decision. And I think the most important thing here is uh, just trust yourself. And if you don't trust yourself yet, try to learn more about trading or investing to the point uh, to 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 the point where you trust your own abilities when it comes to decision making. So if you're asking other people whether you should sell or hold or buy, you're not to that point just yet. And I think it's very empowering if you can make the decision yourself, if you're not relying on other people. And I've mentioned this time and time again. I just don't understand why people look at broker buys, sells, or whatever, and just blindly follow that. I just don't understand that at all. It's one of those mysteries of life because I think it's just so much better if you can make the decision yourself. So I can't make a decision for you. Can't make a decision for you. I can look at the chart. That's about it. Fantastico says, put a stop loss, a type stop loss. Yeah, you could do that. You could always buy back in at $1.50 later. Dev Shaw sold at 82 cents. He regrets it. And Dykesy says, don't ask people for trading advice. Learn how to value a company by yourself. Yes, it's absolutely right. I think that's very important. The other point here is, why did you buy shares in the first place? This is a very important point. Why? So if you don't know why, then my next question would be, then why? Why did you buy shares? So if you don't know why, then why? Anyway, so why did you buy shares? Is it for the long term? Do you think this company is going to grow significantly in the long term? So then the answer to your question probably simple. But if it's more of a trading position, then what are your sell signals? So that's the other thing. What would make you sell? And I do believe when you initially buy into a position, you also should have a sell scenario, whatever you want to call it. Reasons why you might sell out. So if you're buying it for the long term, a reason why you might sell out is if the company has fallen into bad time. Maybe manager, maybe you like the CEO and that CEO is left, or maybe the company has stopped growing, or many reasons why you might sell out of a long-term position. And if it's technical or if it's a trade, for me, that's much easier than an investing decision when it comes to sell, because I have sell reasons. Every single time I take an initial trading position, I have when I am going to sell. I don't have price targets because I think that can lead to people selling prematurely. But I always have, if the share price falls to this level, I will sell. And Dev Shaw says, how do you value a biotech or tech company with unmet needs, but still initial phases with tight finances and no revenue? You can't. You cannot, in my opinion, accurately value a biotech or tech company with no revenue. The reason I say that is because there's no revenue. You can try to forecast revenue and cash flow, but it's a fool's game. So I think it's very hard and almost impossible. And the whole reason why these type of companies have a lot of volatility is because it's all about sentiment. Really, the share price of a company will go up and down on sentiment for these type of companies because there's no financial backing. There's no financial footing, a good way to put it, no financial footing for these companies. So a share price of a story stock, which these companies are, can go up 200% and then drop 300%. And then go up another 200%, then drop 300%, then go up 500%, then drop 300%. And during this whole period, you just don't know when it's going to turn. So technical analysis is good for these sort of situations, in my opinion. Okay. Oh, Philip says BTR, which is Brightstar, earnings per share expected to be 16.5 cents in 2 years' time. Do I take seriously expected earnings per share over a 2-year period? I will, on occasion, actually do pay attention to that. If we have numerous brokers who do have or done analysis on a company, but I always look at it with a grain of salt, particularly when it comes to mining companies, because mining companies are price takers. Should I do a video on what is a price taker? Maybe I should. What is a price taker? Why are mining companies price takers? So if I was selling a product, I'll do it really quickly here, and then I might do a standalone video. If I was selling a product, I set what price I'm going to sell that product at. Sometimes I might sell at a discount, go through sales. So I have the say. So if I, manufacture widgets, I decide what price to sell those widgets for. Mining companies have no say what price they sell their commodity at. It's all about markets. It's all about demand, supply. That's why we follow the price of gold or silver or iron ore. That's the price, in a way, that the mining company can sell their product for. So they have no say. They are a price taker. They have to take the price that the commodity is selling for, hence why they're a price taker. That is why some mining companies hedge. They will, put in a contract where they're selling the price of their commodity for the next 2 years at a certain price, because it de-risks the company moving forward. Now, if the price of the commodity goes through the roof, then, that was a bad decision. But anyway, so I probably would look at mining companies' expected earnings per share with a much more skepticism, because it's all based off the underlying commodity. So Brightstar, what is Brightstar? Are they gold? I forget. Gold or copper. So if gold goes through the roof, they could have earnings per share way greater than 16.5 cents. But if gold or copper goes the opposite direction, they could be loss making in 2 years' time. So yeah, and so if the experts are right, if the analysis are right, and BTR has 16.5 cents earnings per share in 2 years' time, let's just have a look at the expected share price, 46.5 cents. That means the company right now is trading on 3 times forward earnings per share, which would mean the company would be cheap. Yes. So the question becomes, how much trust do you put in that earnings expectations? Tinker table. Perenti has a negative turn signal candle 2 weeks ago. Could retrace a little bit. I have no idea what a negative turn signal. Oh, I think it's just saying there's a candle 2 weeks ago that was sort of suggesting that the share price was going to turn negative. I'm just going to have a quick look at this. So I'm not that advanced with technical analysis that I can say, look at this chart and go, oh, the share price is going to turn negative. Yeah, I can't look at this and go, oh, maybe the one on the 1st of July, because we did see a little bit of selling. But for me, this is not that bad. The share price is sort of going sideways, maybe consolidating. So I can't see anything in this that would say to me it's going to turn negative. But again, I'm not an absolute expert in reading these one-day candlesticks and saying, well, the share price is going to go up or down. I think it's not a bad chart. Not a bad chart at all. That's just my opinion. I could be completely wrong. So signal 2 weeks ago. So let's go back 2 weeks ago. Was it the 3rd of June? Well, that's 1 month ago. Yeah, I just can't see anything in here saying it's going to turn negative. So what I would probably say is if the share price fell maybe below that, that would be negative. Or maybe below that would be negative. These 2 lines would be sort of negative if it fell below that. Anyway, that's just me. Oh, Trader Hooper. I'm looking forward to seeing how you handled half-year and full-year reports in August. I hate them because there is so much or too much information and I don't know what I am looking for, so I just feel swamped. I understand that. I wasn't ready to learn that back in Feb, but am now. I definitely understand why you might feel swamped because there are just so many financial reports released. Every single financial report I will open up. And sometimes I'll have a very quick look and that's it. It would be really handy to have some sort of spreadsheet or some sort of anything where we have all the expectations of the companies. We do have that for the Nasdaq and New York Stock Exchange, but I've not found that so far for the ASX. However, TradingView, I think TradingView does have this. And I discovered this after February. TradingView reporting calendar. Global companies, this is a calendar. I haven't looked at this for a while. And what we'll do is we'll go how do we change? Oh, there it is. So if we go to August, here we go. So I'm wondering, so this has a list of companies releasing their reports. So for example, August, I don't know how accurate this is, but on August 5, Credit Corp is releasing their results and they have an estimate earnings per share. So maybe this is what I'm looking for, trading view, but I don't know how accurate this is, because one of the most important things is how the results meet expectations. And sometimes if the company puts in any sort of forward-looking outlook, usually in the full year results, you don't see as many outlooks. In fact, you won't see much outlooks. You're more likely going to see outlooks when the company has their AGM in October or November. But if a company does release a half-year report, more than likely they will put an outlook section in it. So what I typically do is I want to know how the results compare to expectations. And a lot of times I just don't know. And then I see the market reaction. So a lot of times it's just based off shares start trading at 10 a.m. Oh, share price of this company is up 10%. And this other company is down 12%. Now we know how the results compare to expectations. That's typically what I do. Very quick look at the results, which could be like a minute. And then I have a look at the reaction from the market. Hopefully I've answered your question. And it can be overwhelming. And typically by the end of the month, I'm over it. I'm over it. And a lot of times I will put all these results I want to have a closer look at. I put it into my sort of watch list and I never have a look at it. Just after that, I just move on. So for me, the most important thing is not the results. Unless you really want to delve deeply into a company, the most important thing is how the market reacts and how the results compare to expectations. Just Jim McCramer has another call here. Domino's Pizza, $8 target. Matured, slow growth, low margin, struggling business. Fantastico says Collins Food is also slow growth, low margin, struggling business, but richly priced at a premium valuation. What gives? And irrational exuberance, just Jim Kramer says, the European division is going broke, 2.5% EBITDA margin, WTF. This is definitely a case where you just use technicals and just wait for any sign of turnaround, Domino's Pizza. I would guess that quite a few people bought on the fall in share price on the 2nd of July. The very fact the CEO resigned after only being in office for a few months is a little bit of concern. I think the chair or one of the directors of Domino's Pizza says it's nothing to be worried about. You have to worry if a CEO has just left. That's a concern. I have a story about, went to school with someone who became the sitting CEO of a company. The company was called PAS Group, PAS. And I was like, that's interesting that he's the incumbent CEO or something. So the original CEO was there and he was the on-job learning CEO. And then all of a sudden he just left. There was an announcement from the company, he's just gone. And I was thinking, I don't think this is good news for the company. And within a few months, the company was bye-bye, went into administration. So sometimes if the new CEO or the CEO in waiting, that's the good way to put it, CEO in waiting, if they just leave, that could be a bad sign. They have seen something they may not have liked. Or maybe health reasons, we just don't know. But the chart for Domino's Pizza just looks nasty. It just looks nasty. It's just been dropping and dropping and dropping. So what I typically do with these sort of situations is I just wait for the first sign of a turnaround. There was a possible sign of a turnaround back in February, but I think that was a false. I still remember wondering why the share price or the market was reacting really positive to it. I didn't see anything positive to it, or not much. And I thought that was an overreaction to the market. And yeah, that was the right thought. So for me, Domino's Pizza, this is a possible turnaround story, but some turnarounds never turn. But if they do start turning things around, this could be eventually cheap. But there's a big if there. Okay, VBED wants to rank the worst companies on the ASX. If you rank the worst managed companies on the ASX, number one is Peninsula Energy. I can't argue with that one. I have been following Peninsula Energy for ages thinking, this could be interesting to have a project in Wyoming. When uranium went on a massive tear, Peninsula Energy went the other way. And they keep I think they keep delaying their project. They keep doing capital raisings, and I've just got, oh. Anyway, and number 2 has to be Helia. In the news release, the Helia board announced they intend to do a strategic review, whatever that means. It means they don't like where the company has gone and they want to change where the company is going. So for me, strategic reviews could be a signal that the bottom has been reached, the worst is in, but you just don't know the outcomes of strategic reviews. So strategic reviews for me is just that the company's not performing. Yeah, Helia is at number 2. I think there's a lot of really small companies that are really bad, but they are fairly, like Dubba has been really bad. And there's a lot of companies that are no longer on the ASX that have, the management have been awful. I just can't think on the top of my head anything worse than Pinnacle Energy. There's probably something will pop up, but eventually, but Pinnacle Energy. Like I have said some really bad things about Vection Technologies just because of the recent capital raising. And I think that was really badly done. But in saying that, that company has just been winning contracts after contracts after contracts. So my thoughts on Vection Technologies has actually changed just slightly. But Peninsula Energy, yeah, I can't argue with that. Ooh. Ben Hutchinson, a very good point here. Curious, did Kaiser Reeve pay East Coast Research to promote them? He says yes. East Coast describes them as having a sponsored research model. You do have to be careful about some of these brokers. I don't know what you call them. Like East Coast Research. What's the other one? Next Investors. They do get paid to promote companies. That's something I learned quite a few months ago. And East Coast Research is one of those. They do get paid to promote these companies. I just wish I would get paid to promote some companies. I've actually thought about that, reaching out to some of the companies and saying, hey, give me some money, I can promote you. Sponsored research, yeah. So just be aware of that sometimes. And the reason I say that is Next Investors, you'll see the share price when they promote a company just spike. And I go, well, no, they're just promoting it. They're not saying it's a great company. They're just promoting it. So thank you for that, Ben Hutchinson. It's something that needs to be pointed out, and I don't do that all that often. Adrian, every single time I see this user, I just think of Rocky. Anyway, is his name Adrian? For some reason, I just haven't thought. I don't even know his name. He's just Rocky. Adrian. It's his train. Is it his train? No, it's his wife. Adrian, yeah. Or who? I don't know. Who is Adrian and Rocky? Let's have a look at the list of Rocky characters. Yeah, Rocky's girlfriend and later wife. Yeah, Adrian. I just think of Rocky screaming at Adrian or something. I don't even know where that's from. Okay, sorry. So every single time I see Adrian, it's for some reason Rocky. Just there was someone died the other day. It was Sly Stallone or something like that. And I thought it was Sylvester Stallone. I went, Sylvester Stallone's died, but it was a musician, Sly something. Anyway, hi, Michael. If you're able to give any insights into the Palladium chart, that would be great. Looks like it's approaching a breakout territory. Well, I could do this tomorrow, so I'm going to do this tomorrow. Focus on Palladium because I will look at Palladium. So hopefully I don't forget, but I will look at Palladium tomorrow. Okay, host Luke. Luke, what do you think of Pinnacle Investments, PNI? It's a company I'm thinking about buying. So I did, in fact, I'll show you right now. In Fiscal AI, I did an income screener. I did a video on this. So I had all these little filters. So for instance, revenue growth, dividend per share growth, and unfortunately, it doesn't look like Fiscal AI wants to run this screener. Sometimes it does this. Anyway, because it's not doing it, maybe I have to totally close out of Fiscal AI, go back in. And sometimes some might say I've got too many tabs open. Let's see if that worked. Now, it's still not working. It's just a little thing just turning. Anyway, so I ran this income screener, and do you know who popped up? Pinnacle popped up. And I have not really thought about looking at this company in the past, but it popped up. Investment management company in Australia. For some reason, I've always thought of this company as being an investor in other fund managers. So they're a fund manager who invests in other fund managers. I don't know if that is right, but it could be right. So I would say fund manager and maybe invest in other fund managers. We could actually, we could Google, copy, Google. We could even ChatGPT. This is sometime, I should do this way more than I do, but Pinnacle, do they invest in other fund managers? Pinnacle, searching the web. Yes, Pinnacle Investment Management Group actively invests in other fund managers as part of its multi-affiliate business model. The firm acquires minority equity stakes in specialist investment managers, referred to as affiliates, and provides them with a range of support services, including distribution, infrastructure, and operational assistance. Recent examples of Pinnacle investment include 22.5% stake in VSS, a US-based private market specialized firm specialized in structured capital investments. Also invested in 5V Capital, Australian private equity, and venture capital firm. So I am on the right path, even though I don't know much about the company. So you can just see the benefits of ChatGPT, even if you misspell something. Okay, so that is what I have. So this company popped up. And one of the reasons it popped up, if you look at the revenue growth, nice revenue growth over the last 3, 5, 10 years. Earnings per share growth is really attractive as well. We're talking about 30.3% earnings per share growth over the last 10 years. Even the last 3 years, 18%. Don't really care about gross operating margins for this type of company. Return equity 21.3%, and nice dividend growth as well. Because again, this was an income screener, so I did have a look at nice dividend-paying companies. So dividend yield is 1.6%, maybe on the low side, but I would expect that to grow over time, and it has grown over the last 3 years at 19.9%. So if you buy some shares in this company, so you have a dividend yield 1.6%, but maybe in 5 years' time, your dividend yield on your initial capital could be 5%, or maybe 10%, or maybe even higher than that. Anyway, and P ratio only 29.5. Now, just because it's 29.5 doesn't necessarily mean that's good value. So if you have a look at history, and we'll just get rid of that big spike, it's not that significantly overvalued just based on the P ratio. P ratio has been as low as 15 recently, or 18, so it's not that expensive. And the chart, we did see the share price drop a lot, I think. If I remember correctly, share price did drop a lot. The chart had been looking really good. Yeah, it did drop a lot. There's a big drop here. Went from 27, almost halved. And in fact, the chart looks really good now. I don't mind this chart. I do like this chart. So Pinnacle, maybe one to put on your watch list. Maybe Pinnacle is one to put on your watch list, just based on the chart. And I don't mind, yeah, that's all. I haven't delved deeply into their investment strategy, but yeah, it's interesting. Anyway. And other than that, it's up to you whether you buy or not. Fly in Kiwi. I wonder if this is a fly in, fly out. I'm watching Bellevue closely. My technical analysis, reading chicken and trails, suggests the price drops aren't quite over. So again, this is probably someone who knows more about technical analysis than I do. I'm very simple. I show 2 coincident targets at 66 cents. So what I'll do is I'll bring up the chart of Bellevue Gold, and we'll see if I would be willing to trade this right now. I think the answer to that would be no. Yeah, no for me at all. No for me at all. I have no interest in this chart at all. Still in downtrend. We've seen share price go sideways for a while. So I'll be on the sidelines for this one. So we have Flying Kiwi saying it might drop. Again, I don't have targets. I never have targets. I'm not that confident when it comes to technical analysis to have targets. So this is Flying Kiwi saying, so I'm just waiting to see if that happens. Volume was super strong over the past 6 weeks. So I do like to have a look at volume. And yeah, that's true. We have seen high volume since that big drop. But is dropping steeply away now. Yeah, okay. Oh, we definitely see that. It's going to be dropping away now. So there's less enthusiasm when it comes to Bellevue gold at these prices. That's the way I look at that, which means there's might be more to drop for moving forward. Because if there's no enthusiasm at these prices, there's more likely to drop. Now, the other thing I'd say is if gold prices go on a massive tear, Bellevue gold share price will go on a massive tear as well, more than likely. But the very fact that share price of Bellevue gold is in this really big downtrend is not good look. It's not good when the share price of a company is going to the opposite direction than the underlying commodity. So what else does Flying Kiwi? This is really interesting. If I'm wrong, I miss out, but there are a lot of good targets out there. Yes, I've said that a few times recently, that there are so many opportunities. Just because you miss out on something doesn't necessarily mean that's a bad decision, does it? There's a lot of opportunities out there. And I think it comes back to risk reward. So in this case, I have a look at this and I just don't know which way the share price is going to go. So I could definitely see it falling from here, but am I confident the share price will rally? No, I'm not. So another reason I'm staying out. Kaiser Reef just had another broker release. Yes. So unless there is some really good news, possibly around an executive shakeup or takeover before that happens, but first capitulation. So thank you for that, Flying Kiwi. Some really good thoughts there. Okay, another bank video I'm doing is on VBED, talking about, have you ever thought very deeply about the true nature of the market? Deep thought-provoking question here, or comment. And I don't know how to answer this one just yet. And there's no way I could answer this comment in this video. ShamG33 says, I'm interested to hear your thoughts on Fenix. Actually, Fenix is a company I've owned in the past. We'll have a look at the chart, first of all. And I have thought, when I sold out, I thought, maybe I shouldn't, because I do like the potential of this company for the longer term, even though it's a mining company. Share price not doing much, just going sideways, but that's okay. That's okay. I do like how they're diversifying. And I think maybe ShamGG will say that. ShamG33 will say that. How would you go about FA for a mining company? I don't do any financial analysis for any mining companies because, again, because they are price takers, it can be quite hard to do a very accurate fundamental analysis, like a valuation of a company, because it all depends on the underlying commodity. So first you have to try to understand the underlying commodity and then delve deeply into the mining company. So it's why I won't consider mining companies to be high quality, but I will be willing to trade them. And I'm also willing to hold some of these mining companies for the long term, particularly if they're like Fenix and they're diversifying and there could be some good value, even though they are price takers. So he does mention here they are putting significant investment into the business at the moment, housing for workers, truck and train haulage, new mine becoming operational in the last couple of months. So they are diversifying their revenue streams, that sort of thing. And I do like their business model. I work in the resource sector. Ooh, you know, more insight from someone who's in the field in Geraldton, WA, metallurgic lab, providing sample analysis for predominantly iron ore. We have been inundated with samples the last month with lots of analysis and moisture content checks for the chips leaving port. It seems there is a ramp up of production as this is the busiest the lab has been in a couple of years. Some of the mines we service, Fenix, Liontown, PRG, Terra, Carrara, KMG. Does that mean if there's a ramp up of production in iron ore, does that mean that should lead to an increase in supply? And if demand doesn't change, price of iron ore should drop? I'm just putting it out there. Anyway, so with a mining company, I don't do fundamental. I don't do evaluations of these type of companies just because, again, price takers. But I do like Fenix. It's not that expensive. I would assume Fenix might even be considered cheap. Let's see, P/E ratio 16.8. Don't necessarily look at P/E ratio for mining companies because, interestingly enough, the time to buy mining companies is when the P/E ratio looks really high because the underlying commodity has dropped a lot, so they're not making much profit. But then that's the bottom of the cycle, and when the commodity prices go on a massive run, the company's just flowing with cash flow. So don't necessarily look at P ratios when it comes to, that's another thing. That's another thing. Yeah. Yeah. So at the bottom of the cycle is a time to buy mining companies, but the fundamentals actually look the worst at that point when it's a time to buy. So that's another reason why I don't do fundamental analysis for mining companies. Anyway, so Fenix is a company I've owned in the past, and share price not doing anything because iron ore is just not doing anything. So at least the share price is not in the downtrend. So if you have a look at other mining companies, they're in downtrends. Fenix is not. I did actually, the other thing I should point out is I was going to buy some Fenix at 24 cents. It got to 24 cents in September. And I just kicking myself, I didn't buy some shares because that was my price target for Fenix. And I was thinking at that point, oh, maybe the share price can drop to 20 cents. And if it drops to 20 cents, I would definitely buy some shares in Fenix. I'll just put it out there right now. Devshol says he doesn't know why my comment once again disappeared. I bought Codeifai yesterday at 5.3. I hope I bought it at the bottom. So the question is, why did you buy? You don't have to tell us why, but this is for everyone else. Why did you buy something? And hope is not an investing strategy. This one popped up because they bought, what is the ticker code? I forget. It's CDE, I think. Codeifai. They did mention, oh, share price dropped a lot. Oh, sorry, SAF. No, sorry, Devshore. Oh, yes, share price did drop a lot. They also had a price query. Let's have a look at this price query, probably why the share price dropped a lot. Let's have a look at the initial price query. Yeah, it dropped a lot. And let's see what they said. Oh, their answer is the answers I hate. No, not applicable. And then no, nothing else. I hate that. Be creative. There was another company that was really good with their response to a price query. I forget who it was, but I read it and I went, ooh, this is good. Gives us insight. Who was that? Who was it? Oh, I forget now. I read it yesterday. Anyway, Codeifai to acquire quantum AI secure platform. I remember reading that. Anyway, so I won't linger on Codeifai right now. And I wouldn't be, I mean, with the share price, because I'm pretty sure the share price went on a massive run. Yeah. I wouldn't be, ooh, look at that. Share price has just touched the 25-day moving average. This could be the time to buy if you're trading this. 2 big day downs in a row. Now, big down days in a row. Really big volume coming through. But yeah, I don't know. Good luck, Sham. Who was it? Devshore. Good luck, Devshore. I have no idea. But I just don't like the massive volume the last 2 days. But look at that run. Share price went from 1 cent, even below 1 cent, to 8 cents. You're going to see profit taking when that happens. You're going to see it. But when the profit taking stops, I just don't know. It has hit the 25-day moving average, so that could be support. And I just don't like that big volume. What you really want to see is the volume just lighten up heaps, and then the share price goes sideways. I don't think you're going to see that. I think there's going to be continued high volatility with this company, and I wouldn't be surprised to see on Monday the share price go up 20%. SAF99681 says, hi, Kneppy. What are your thoughts on Vysarn chart? I think I'm going to like this one. Vysarn chart. Let's have a look. Yes, I like this chart. I like this chart. Vysarn. I'm going to put this onto my watch list. I do like this chart. So there was a little bit of resistance at about 48 cents. There was a bit of a downtrend. And the share price broke above that on Tuesday and has gone to 51 cents. I do like this chart for Vysarn. So I actually did own shares in this company for a long, long time. And then I took some profits. And I shouldn't have completely sold out. I did completely set out. I should have done that. I should have maintained a longer term or longer position because I actually do like this company. So there was one little mistake I did make was actually selling out completely of Vysarn. But I do like the chart. JL Klua says, is Lynas one of the best rare earth plays on the ASX? I wouldn't say it's the only rare earth play, but I'm pretty sure it's the only rare earth producer, not only in Australia, but also in the rest of the world, ex-China. I'm pretty sure, or maybe there's one other in the United States, if I remember correctly. How many, and let's do this, how many ex-China rare earth producers are there? I am going to say 2. I'm going to say 2. One in Lynas Rare Earths and this other one in the United States. Lynas Rare Earth. Oh, Iluka. Oh, no, that's operations by end of 2026. Rare Earth is not a production, I think. There we go. MP Materials, the only active rare earth mine in the United States. Now, this is a way more. Here we go. Yeah, here's production. So China, 70% of rare earths, United States, 12%, and Australia, 5%, which is probably Australia, Lynas Rare Earths, the largest non-Chinese producer, operating the Mount Weld mine in West Australia and processing facility in Malaysia, constructing a heavy rare earths plant in Texas, supported by US defense funding. Okay, so back to the question. Is Lynas one of the best rare earths players on the ASX? Well, I'd say yes. I think that's a yes. Do you think the US-China tariff war has highlighted the fact that China has too much dominance here? Well, it was highlighted many years ago that this was a problem. Not only rare earths, but there was also a few other commodities where China had too much of a dominance, and those commodities were called strategic something or other. And so that's a definitely yes. And do you think this could lead to big investments in companies like Lynas to decouple from China? Yes, we can just see that in this little thing, how US defense funding are supporting that heavy rare earths plant in Texas. Yes, absolutely. So quite a few yeses here. I'm also keeping an eye on Veritas, never heard of it, VMM, and Brazilian Rare Earths. I have heard of that one. So let's have a look at the chart for Lynas, because I do like this chart as well. I had a look at this the other day, and I was like, ooh, it's not a bad-looking chart. And the reason I say that is because the share price has pulled back. And I'm thinking, oh, this could be a nice little pull by the dip situation, just like we saw back in May. And there was another one in March. Anyway, so, and that's all I've got to say about Lynas Rare Earths. I'm just going to go briefly through the other two charts. VMM, I'm assuming this is just these are just exploring companies. Veritas, let's have a look at this charty. Ooh, hello. Ooh. Just on technicals, this chart is looking nice. I like this chart. Look at the volume as well. Don't look at don't only look at the price action. Look at the volume. Look at where you can see these big spikes in volume, and look what happened to the price at those points. And then look after what happened. Look at what happens after when the volume dies away. We don't see much selling. Share price goes sideways. Another spike in volume. So that's a really good sign. Now we want to see more spikes in volume. The share price keeps on rising. I have no idea this company existed until today. Markup is only 40.95 million. And what's the other one? Brazilian Rare Earths. I have heard of this one. Let's have a look at this chart. Oh, not as quite as good. I do like that Veritas. Oh, this one is much bigger, 551. Okay, let's go back to the questions. Thank you for that, JL Klua. DG Home and Garden. Fineos made a big move today. I did notice that in the top gainers of the day. Don't know why. Chart is looking interesting. Okay. Someone mentioned this could be, oh, what was it? They compared Fineos to, was it Technology One or something like that? I thought, oh, come on. Anyway, this is a really good example of a nice little breakout in the downtrend. So I did put this downtrend line back 2023, 2024. And on the 13th of November last year, the share price just went bananas. Share price went up 28% in that one day. Beautiful breakout. I saw it and went, whatever. And then that was the time to buy. Share price pulled back nicely. And you can see these big spikes in volume every so often. And I don't mind this chart at all. That was a nice little buy the dip situation for Fineos. I'm pretty sure this company is highly cash flow positive. Let me have a look. They do release a pennies 4Cs. Maybe they don't have to anymore. They did release one in April. And this was one of the ones, or the pennies 4Cs, that did impress me. So operating cash flow positive 24 million. Now this company, if I remember correctly, this company is seasonal when it comes to receipts and revenue. And that's something to be mindful of. But if they had this sort of quarter every single quarter for the whole year, this company would be considered undervalued right now. Has a market cap of 1 billion something, or not quite, 795 million. So it's some sort of, they have some sort of software for insurance companies. They're out of Ireland, and that's about it, or what I know. Software company provides software solutions to life, accident, and health insurance, and headquartered in Dublin. I was going to say Dublin, but I didn't want to be wrong. Chart looks good. But again, this share price rise, there was no volume. That's the one little negative thing. There was no volume on that rise. Oh, Stu Percy says, the joke about Assume, first time I saw that was that I was young watching the Benny Hill show. Is that where you got it from? No, I don't think I've ever watched Benny Hill. I got this from someone I know who just said it to me one day, and I just liked it. So they just said it to me. I don't know the context, but they just said, don't assume because that you make an ass out of you and me. And I went, well, that's really good. That's really good. I'm going to take that from now on. Yeah, not Benny Hill. I think I have seen snippets of Benny Hill, but not the whole show. That's a little bit past, not past, that was a little bit before my time. KM says, your thoughts on Clarity and TLX chart, please. Ooh, second last comment of the day. And this will be quick. So Clarity is starting to look a little bit more interesting. Ooh, so share price of Clarity has got to at least a 3-month high. Now, I do own some Clarity Pharmaceutical shares, but the question becomes, will I be, in fact, I bought at 307, went all the way up to $9, all the way back down to $1.50, and I'm still holding, and share price is almost at the level I bought. I do like this chart. I will say that. I do like this chart. It's moving the right direction. We have seen a little bit of an increase, a very subtle increase in volume the last 3 months. If you have a look at the weekly chart, you can sort of see it. So from the 3rd of March, there has been an increase in volume compared to what we saw the previous. And that was during the share price drop. So when the share price was dropping, that was in a lull in volume. And now we're starting to see volume increase. That's a good sign. That's a good sign. I do like this chart. But because I already own shares in it, so I'm going to maintain that holding of shares, but I might trade around it. And I do like this chart. I just wish I bought $1.50. I wish I had the kahunas to buy $1.50. TLX, I'm a little bit less keen on TLX. Now, this is another company I own, and this is a company, always put in the wrong index. This is a long-term position, not going to trade this, just holding it for the long term. If I see the share price drop significantly from here, I will add to that position. The only reason I'm a little bit less positive about this one is because we have seen a moving average crossover, and the share price is struggling to get to new all-time highs. In fact, we've seen 3 lower lows. It would be negative if the share price drops below $22. That would be a really negative move. So a little bit less bullish on this particular chart. In fact, if I was trading TLX Pharmaceuticals, I probably would have taken some off the table, if not all of it off the table. And just Jim Cramer, final comment of the day. John's Lyng Group is up trending nicely. Too late to jump in? Question mark. I can't answer that for you. Although I can have a look at the chart and just tell you what I think of John's Lyng Group. Excuse me, I should drink some water. Wasn't there a takeover bid recently? I noticed that little jump in share price, and that just triggered a memory. There was a takeover bid, receives conditional and non-binding indicated proposal. If I was a shareholder of this company, and I am a shareholder of John's Lyng Group, I've held this one for ages, long time. I actually once considered this high quality. I don't anymore though. But the reason I'm not selling is because I do think this is really cheap, and we now have some technical analysis bullishness. But this company is highly dependent. Their financial performance is highly dependent on the amount of natural disasters, which is weird. So if you have a lot of natural disasters, a lot of flooding, cyclones, all that crap that destroys houses, this company gets a lot of work. And so their success is based off the amount of natural disasters. I do find it interesting. There was some sort of expert on Oz Business Call who said they bought insurance company and John's Lyng Group and it's sort of a hedge. And it sort of makes sense. So if there's a lot of natural disasters, insurance companies will be negatively affected by that, but Johns Lyng Group will be positively affected by that, and vice versa. So just hedging the bets. Anyway, so Johns Lyng Group had that proposal. I would be really upset if they said, yes, this is good, because I think it's an opportunistic takeover bid when the share price is right near the bottom. Oh, I would hate it if they said this is a good deal for shareholders. They should come back and say, piss off, whoever's trying to buy them for at a low price. And it's obvious why someone is trying to take over this company, because they see some value here. I saw some value when I was looking at this company going, well, the chart looks horrible, but gee, I'm not going to sell because there's some really good value here. And now we're starting to see some positive technical signs. We've had a moving average crossover, which is the first one we've seen since the share price started to go negative. And yeah, we've got a 6-month high. Looking good for Johns Lyng Group. Is it too late to buy? No. I think this company could grow significantly over the next 5 years. The highs is $9, so there's pretty nice upside if we start to see way more natural disasters. And that's all I have for today's answer and question video. If you have any more questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.